Welcome to the Weekly Juice Podcast, where we discuss all things real estate, personal finance, investing, entrepreneurship, and the many ways to achieve financial independence. We interview accomplished investors and entrepreneurs with the goal that their stories inspire you to take control of your financial future. Here to get your creative juices flowing, while also documenting their own personal investing journeys, are your hosts, Corey Jacobson and Ryan Bevilacqua.
Welcome back to the Weekly Juice. As always, it's your boys Ryan and Corey here with another episode for you. Today we decided to do something a little bit different. We wanted to bring in one of our good friends and actually one of our team members on our real estate investing side onto the podcast to chat through something that we find as very daunting to some people and then also can be very cumbersome. And so what we decided to do is bring in our friend Travis David, and he is a lending expert. So today we're going to talk about pretty much all things mortgage lending and how to basically navigate getting a loan in 2024.
Yeah. Not only does Travis David have two first names, but he's actually a really, really great guy. We've used him on a number of different projects, but we do not only the education piece here, taking you through the, what are the lending qualifications for certain people? Like, how can you take this roadmap that he takes a lot of his clients through, not just buying your first home, but buying investment properties, buying bridge loans, investment loans. I already mentioned that, but ground up development projects. Like, there's a ton of different, arms that he has, and he's been in the mortgage business for 12 years most recently, but I think 20 years total. So
yeah,
he's
on and off for 20 years.
Yeah, he's really seen the ups and downs, and he works for CMG Home Loans, and I have had an amazing experience with CMG. They helped me get a deal done on my short-term rental that is doing amazing. I mean, it's like changed my life because of getting this deal done. So he's with a great company.
Well, people know. I mean, we've talked about it on the show. It's your Tampa property.
Yeah, exactly. But I didn't know if people knew it was with CMG. And Travis is the fact that he's there is just like all the more reason why we want you to reach out to Travis. Like we are giving you this resource. If you kind of as a, not a reward, but like, thank you for listening to the show. We're going to give you the guy that we work with, like the guy that has helped us grow our portfolio, and the relationship there, we've mentioned it. It's puts you a step above, and Travis goes above and beyond he's done it for my family. He's done it for us. And he would do it for somebody who listens to the show as well.
Yeah. So I think we talk about this in the episode, and I don't want to get too far into this, but it's very important to build out your team when you get into real estate, whether it's real estate investing or you're just buying your first primary home. There's a lot of different nuances, and you want to have the right person in place to help guide you. Sometimes you can feel pushed into a corner, or some people are talking too fast and just trying to get you to the finish line. Travis has a real way about him to slow things down and educate step by step in the process. Like, if you're not ready to buy an investment property, he's gonna guide you through that. He has a laddering program where he basically talks to people that are interested in their first primary residence, and then talk from there, step up to your first investment property, second investment property, multi-units, and we'll get through that into the episode. But what I really like about Travis is how he brings it back to reality and guides the ship. It's not like he's just going to get you through that first loan and say, see you later. He's like, I'm here with you to grow your portfolio and kind of help you make the right decisions and not push you into a corner. So yeah. As Corey mentioned, we've used him for a number of projects. We know him personally. It's funny. We usually bring our podcast guests into the real world after interviewing, but now we're bringing our real world relationship into the podcast. I know I mentioned that in the show. I think it's so cool to bring a friend in here. Yeah. And you guys have been listening to the show for a while. Some people are new, but as you know, we're all about providing free value for people. And I think this is just one of the things, like, it's hard to build your team. It's hard to vet people out, and then going, searching Google for 5 stars. Like, just start here and book a consultation call with Travis. And if it doesn't work out, no problem. But at least you had the conversation and you kind of know what's out there for 2024. We actually set up a page on our website so that it's super easy for you to study up a little bit and then book a call if you are interested. So you'll go to juice-enterprises.com/need-funding. And you'll see a video with Travis, like I said, and then a bunch of information there. If you have questions beyond that, after you book a call with him, hit us up. We've used him. He's literally one of our close friends. Yeah. So I think you're going to enjoy today's episode, but we wanted to help you, give you a tool to put in your arsenal for your real estate investing regime that you're building.
Yeah. At the end of the day, it really pays to have somebody in your corner. Travis is in ours, and I'm sure he'd be willing to be in yours too. That's why we brought him to the podcast. So let's bring him in.
Let's do it.
When you have investment properties and tenants, you need a good system in place for collecting rent to make it easy as possible. And RentRedi can help you with everything. When you sign up for RentRedi, you can start adding your properties, inviting tenants, and creating charges. You can even set up automatic rent reminders and create auto late fees as well. For tenants, they can pay via ACH, card, or even cash using RentRedi's web and mobile apps. They can also use an automatic payment setup and sign up for rent reporting so they get rewarded for paying rent on time. RentRedi saves you time and hassle by automating rent collection, and you can manage everything from one dashboard. For our Weekly Juice listeners, RentRedi's given us a special 50% off for any RentRedi plan using our code WeeklyJuice at rentredi.com. That's RentRedi.com using the code WeeklyJuice. That's WeeklyJuice to save 50% off any RentRedi plan.
Travis, officially welcome to the Weekly Juice podcast. Corey and I are so excited to have you on the show, man. I think it's interesting. A lot of times we bring the podcast relationships to real life. Now we're bringing the real life relationships into the podcast. So we are just thrilled to have you here, man. I know we've spent a lot of time together, but officially welcome to our show.
No, thanks so much, guys. Honestly, it's I'm excited about it, looking forward to it, and I appreciate you guys. Love what you're doing. I know we've had many conversations on many different things, but I'm excited to be here, man. I'm excited to share some knowledge. So
yeah, we're excited for it, man. So let's just start here. Give us a background on you and how you got into the mortgage business itself.
Yeah, so I back in the year 2000, I was with Morgan Stanley in their kind of financial advisor prep program, and every day was dreadful. I honestly, I couldn't stand it. I was going in and just had this, my desk, and I would just sit there, and I'm like, I'm not supposed to be here, So this is just, again, back being in 2000, I'm like, I went home. I remember literally, this is clear as day, sitting in my room at my desk, breaking out the classifieds in the newspaper. And I'm looking in the newspaper, and I come across this thing that says mortgage sales. And I'm thinking to myself, I'm like, mortgage sales? I'm like, who sells a mortgage, right? It was like, you just go to the bank and you get a mortgage. But it said $100K plus on it. And
you're like, I'm in.
I'm like, I'm there. I could, that's fine. It was a lot more than I was making my training program at Morgan. And I'm like, let me give this a shot. So long story short, I ended up calling the number, set up an interview, and sat down with who would be one of my first mentors in the mortgage business, and got started there. And really, I kind of have two phases, or kind of two parts of my career, in the fact of I was 23 or 24 years old at the time. So just picture, what that was. A lot going on, a little bit distracted, right? And I actually did pretty well for a number of years there, but then 2008 hit, and I just wasn't prepared. I really just wasn't probably doing things the right way, or kind of didn't take the proper preparation. So from there, I ended up going to TD Ameritrade, being a financial advisor there for 4 years. Long story short, just got the itch to being back in real estate. Got back into mortgage in 2012, with the difference being, I was at that point a little bit older, a little bit wiser, and I was committed to the business. And I share this a lot to say, until you actually really commit to something, you're not going to get the fruits of it. And thankfully, ever since then, I love the business. I love what I do. And, it's just something every day is different. It's a challenge. And we just build on it from there. So that's kind of the long and short of how I got in the business.
Well, you've been doing this in this capacity for 12 straight years, right? So you've seen this growth in the market and the changes, and the interest rates drop and they go back up. So in order to withstand that, you gotta stick it out, and you have. So I think that's pretty cool. And just to give people some context, Travis has invested in syndications that Ryan and I have done on the limited partner side, and general partner as well. So not only is he in the mortgage game, but he's a real estate investor as well. And I wanted to bring that up because that's in order to do your job really well, you got to understand the different facets of the real estate game. Not only that, but flipping and rentals and all that. I know you probably had a segue to go into something. I just want to give people that are listening some background on like our connection and how we know Travis.
Yeah, well, we've done a couple of deals with Travis in multiple capacities, but I think one of the most important things is to note is Travis has experience in buying and holding rentals. He's flipped properties, and then he's also now in the later part of his career or semi-later part of his career, and now he cares about his time. So he's invested in syndications. And we kind of talked about that pre-recording just to go through, because I think a lot of times when people start building their real estate team, you can get an agent or you can get a lender, and they have no experience of working with investors, and they're just kind of the weekend warrior. So I wanted to make that clear, ahead of time. That's why we've worked so well with Travis. He's helped us with a bunch of properties that we have as well. So it just helps to have someone that knows the game and has navigated. I really appreciate your story. It's like you started in the business, you took a leave of absence to try something new, and then you came back because you're committed and you realized, how powerful it actually is. So, having said all of that, can you take us to today and kind of what you're working on within the industry and what you have to offer people?
Yeah, definitely. So, and just to actually take one step back too, if I could, because I think it's funny to know, and I don't know if you guys are familiar, but you're talking to a guy here that when I was a teenager, I actually ordered the Carlton Sheets tapes there used to be a night infomercial on how to make money in real estate. And it was all about lease options, and just like, I got this huge binder like this thick with literally tapes that I sat there like starting to think about. And that was where my love of real estate started too. I was literally, I think it was 16 or something. I saw it on an infomercial, brought it in. I read the book, got all the tapes and everything. And so
those infomercials worked. That's crazy. They definitely really did. Yeah,
they did. And Carlton Sheets, if you look him up, he was one of the first kind of pioneers in that realm. And it just kind of goes back to where like my parents were huge advocates, and always, as much as they didn't do it, they did buy their own house, but weren't investors. They always told me, even at that age, buy real estate, right? So I was lucky enough, I think I was 22 when I bought my first property. So and literally I bought it for $115,000, small condo, sold it for $160,000. Took that money, I parlayed that to my first 2-family. Then I stayed there for 2.5 years. I bought my next 2-family. So and I get this question a lot, as far as when I'm speaking a lot of times with investors or even just first-time home buyers that are saying, I want to buy my first home, but I want to expand and eventually own rental properties. There's a laddering or a roadmap that really can streamline that in a really good, effective way. And there's also a lot of pitfalls that people can do if they don't kind of think 1 or 2 transactions ahead. So that's kind of like some insight where I love when I get my younger first-time home buyer clients coming in and saying, I want to build a portfolio, because I've walked that. I've been down that path. I can add a lot of value to somebody like that, right? So that's just, I wanted to get, kind of fill you in, because I think it's so funny when some people, when I talk about Carlton Sheets, it's like, oh, the old infomercial guy. But that's where it actually started. And, if you have a passion for real estate, you have a passion for real estate. And that's probably why I got out of it and couldn't stand to get back in 2012.
The Carlton Sheets of today are all the podcasts that are out there too.
100%.
So like we don't have that experience on the infomercials, but Bigger Pockets and all the podcasts that got us started. So it's actually, kudos to you, because it's actually a lot easier. It's a lot easier today to get into real estate than it was when you started. It doesn't, yes. I mean, the inflation and all that makes it like people think it's more challenging, but the knowledge at the base, it's all out there, right? And like it's, the education is just the internet, right? So there's so many different ways to get involved, and we're excited to hear about where you're at now. I know that the mortgage business has been really good to you, and you provide a lot of products and services, not just to first-time home buyers, but also to investors as well. So maybe if you want to walk us through what you're seeing now, most common, and like how you've been able to service a bunch of clients.
Yeah, definitely. So that's, I'm in a good enough spot here where I have a huge product base, right? And I'm with CMG Home Loans now, which we're able to, they're very forward thinking and innovative. So not only do we have proprietary product that's able to handle certain, some on the owner occupant side and also some on the investment side. And I'm not going to sit here and list out a whole bunch of product, but just to say that when it comes to that first time home buyer that's coming in looking to buy their first place, there's grant programs, there's down payment assistance. We do a lot of renovation loans. We love renovation. Probably, a good portion of our business is renovation at the moment. And then on the investor side, debt service loans, asset depletion, new construction, bridge loans. It's a big menu of product. And I say that and I try to explain it even to clients to say, a mortgage product is just a tool, right? It's a means to an end. What you have to have behind it is, and what I like to, honestly, how I hold myself out there as a strategic lending expert is like somebody, not only we're saying, if you want to come to me and get a loan, great, awesome, I'll do your loan. But you're going to get a lot more than just going to either Rocket Mortgage or so. You're going to get great wealth building advice. You're going to get personal touch. You're going to get somebody who follows up. It's a long-term relationship based kind of process. And that's kind of, if we're talking differentiation, I don't know any other way to do the business, to be honest with you. So
yeah. First of all, I think that's great. And this kind of can segue a little bit into my own personal example of using CMG. And for people that didn't get that, CMG Home Loans is where Travis is at. And the reason why I bring this up is because we always say it's a relationship business. And like, you kind of hear that over and over again. It's like, what does that actually mean? Like, I'm telling you, it is. If you have a connection with somebody, you care about them, you want to see them succeed, you are more likely to go to bat for them. So the reason why I bring this up, if people are looking to get a loan, to get a mortgage, Travis is that guy. And I've seen it with CMG, for example. First of all, this is just my personal example. I don't know this is going to be this way every single time, but CMG had the lowest rates out of anybody that I shopped for when I was buying a short-term rental, period. And it was significantly lower. And there were multiple times in the lending process, which everyone knows can be a tedious thing. Not just tedious, but like, we're trying to make it so that it's less tedious and less annoying and less cumbersome and have less paperwork. But my experience is that CMG went to bat for me with the underwriters because I had a situation where I was trying to put 10% down. I realized I had to put 15, and they made it work. And I don't think that's the case with every lender. Especially if you just go out there and get a random lender, it has to be, I know Corey, or I know who this client that I'm working for. And there is still that give and take in the underwriting and the loan process. We're not working with robots. It's not all numbers. Right. It's who are these people? I'm giving this person a loan, and I'm kind of, in a way, betting on them, the bank is, to say that they'll pay their mortgage. So I just want to throw my personal story out there because I would feel like, it's so relevant in this scenario. Yeah,
no, definitely. And you kind of hit it too, as far as that, like the lending process, while it is, technology obviously is making their way into everything these days. But real estate typically is always very slow to kind of adapt, but it is getting there. So that all to say, conventional loans, Fannie Mae, Freddie Mac, they're funding these things. There is an automated underwriting engine where, everything has to be approved through, but there is a gap between, it's kind of like bad in, bad out, right? If the person entering the information is not right, you're not going to get the result, or you may get a false result that creates an issue down the road. So there's a level of expertise that's needed by the loan officer to know what's what, know guidelines. Something's just, digits in a box. That could have a huge impact on the other side of it. And that's why you hear, unfortunately, one of the things I even bring up to some clients is, especially first-time home buyers, is I'm sure you've probably heard of somebody who's had a bad mortgage experience. I think the stat is over probably like 60%. Well, so, and why is that? Why is that number so high? And much of the, it really has a lot to do with, in my opinion, not taking the proper preparation and not working with the right people. And there's a huge gap there in our business. But that's where, where there's a gap for us, yeah, it's an issue. but for us, it's opportunity. So
I couldn't agree more. And honestly, for anyone that's been listening to our show over the last 4 years, there's a reason why we haven't brought on many realtors, and we haven't brought on any mortgage loan officers. And it's because there's so many people out there that aren't committed to their craft. And I mentioned it earlier. It's like the weekend warriors. They're not doing it every day. They're going out on the weekends. They're just trying to put the pieces together. And honestly, kudos to those people, right? They're trying to make a life for themselves and their families. There's nothing against that. But personally, I want someone that's doing it and in the trenches every single day. And for us, the relationship is huge. How many times did Corey mention going to bat for? Like, that doesn't happen in the space unless you have the relationship. So that's why we wanted to bring you on the show. It's like, there's no one else I trust to have this conversation with and to bring to our listeners and say, hey, listen, like, if you're trying to buy your first primary residence or multiple primary residences, or you want to become or jump into the investment game, we have a guy for you. And there's a bunch of different products out there. Specifically, Corey and I we've used the renovation loan, and he used it for a short-term rental. So we've used some of the products personally in our lives, and they've worked well. What I want to touch on right now, Travis, is what's your experience like working with investors? And with that, what are you seeing today in the market as like some popular products, or kind of how the market's shifting? I know there's a lot of buzz and around real estate investing, and just kind of how you guys see yourselves fitting into that niche.
Yeah, no, good question. And thanks so much, guys, for the endorsement. I really like the kind words. I really appreciate it. But it's in the investment space now, there's two products that are really get the majority of, I don't want to say looks, but I find myself talking about a lot more. Number one is debt service coverage ratio loans, which if you see them out there, they're called DSCR loans. And the great thing about DSCR loans is that a lot of our investor folks are a lot of times self-employed in some way, or they have some sort of business element going on with their tax returns or W-2s where it's not advantageous or possible to get the loan by showing tax returns or pay stubs, W-2s. What DSCR loans allow them to do is, as a borrower, we can evaluate the property much like a commercial property gets evaluated. It's a cash flow approval. So if we're looking at a single family house, it may say it's pulling in $2,500 a month in rent. As long as the mortgage payment on the financing is going to be covered by the rental income, we're good to get an approval on a debt service coverage ratio loan. So that's a huge benefit to a lot of investors out there, where they don't have to worry about, and just kind of going back to the process of, there's a lot of documentation with conventional loans. That's probably the most intensive. Last 30 days of pay stubs, last 2 years W-2s, last 2 years tax returns. It could be daunting for people if they have any sort of level of, extra elements to their tax returns and stuff like that.
Totally.
So that's one of them. Yeah.
Cool. I wanted to also add some more education pieces in here too, because I think that people that are listening to our show right now, it's great that you offer all this, but what does it mean for the consumer or for the investor themselves? And the example that I'll give is there's many people that haven't bought homes before, or just getting into real estate thinking I got to put 25% down on an investment property, or I got to put 20% down even on any property. And I'll let maybe Travis elaborate here, but I know, you can put 3.5% down on a primary residence. You can put 5% down on a primary residence. You can put 10% down on a vacation home loan. You can put 15% down. I've done it, 15% down with CMG on an investment loan. And these are things that people don't know. It all depends on your specific scenario, your specific credit score, your debt to income ratio, all of these things. But you don't just have to, the book has opened up a little bit. Now, lending is still very strict and it's tight, and it should be, or else 2008 would probably repeat itself, right? But there are, I guess, numerous ways to get into investments that I think maybe you could share some other ones if I've left out, that I think people might really benefit from hearing from someone who's been doing it for as long as you have. Yeah,
no, definitely. You did an awesome job there, Corey.
Cool. There you go. Maybe I covered them all.
Good summary. Take care. See you guys later. No, it's but that's and most, if people are just getting started, buying their first property and then want to level up and acquire units, capital is generally usually the first hurdle, right? So that's where we're going to start out this roadmap with what's the minimum capital investment scenario that we can work out to where you can acquire the most amount of units the quickest as possible. And then what does that look like in transaction 2 and transaction 3? So for example, you touched on, FHA. FHA is a great loan product for multi-unit. You can literally put down 3.5% on buying up to a 4-unit property. That's awesome. Conventional loans, you can actually buy up to a 4-unit with as little as 5% down. Now, a little nuance there, which comes into play and a lot of people don't know about, is if they go ahead and they buy with FHA as far as their first loan, or if they buy with conventional as far as their first loan, when they go to if they try to use FHA going on for their second purchase, there's limitations as far as rental income that they can use. So there's these different little, and I say that as an example to say there's these little kind of hurdles or pitfalls that if you don't plan things out properly could really come up to bite you, right?
Totally. I was just going to say too, what I really like about this is even just the way you're framing this conversation, you're talking to us as if there's multiple, like there's a blueprint, and you're helping people scale up and if they're not investors, become investors, or if you are an investor, how do we get you to scale up and get to the next level, right? Which I don't know many loan officers that would do that, right? It's like, hey, thanks for the loan, got it, on to the next, and they cycle through, right? For us, that's why we like the hands-on approach here. My question for you is, with this laddering too, there's probably people listening from all over the United States. Do you guys cover every single state? And who are the people that could work with you, and who are the people that unfortunately you can't take care of?
Yeah, so we're licensed in all 50 states. I myself personally am licensed in New Jersey, New York, and Pennsylvania. That list will be growing, but we have clients from all different states, and it's something where we're able to, whether it's Florida, the Carolinas, we have a lot of people moving there. We have the staff here and the licensing to where it's anybody buying in the 50 states, we can help out.
Cool.
So that's really not a limitation that way.
So we talked about this a little bit previously, or like I think maybe you and I have just talked about this in general, but can you talk about the difference that you've seen? I know you've not bounced around, but you transitioned to CMG recently. I said the last couple of years. What's the difference you're seeing working with CMG versus someone else? You don't need to name another company, but the strategic advantages you see for investors or people buying their first homes, and then also what you're able to have in your arsenal as someone working there.
Yeah, no, that's a good question too. It's I was with the same mortgage company for about 7 years up until last year. Then there was a situation where we had to make a move, and there was a little bit of jockeying around early last year. And I'm never there's a lot of lenders in the space that prefer to bounce around and like they could take the next best deal. Okay. I'm not that way. I like kind of digging in, being, there's this level of loyalty and appreciation, and just kind of like you want to build a home as far as where you're at. You always lose something in change, and I've seen that. So I didn't want to be one of those who bounced around. But CMG as a company and as a home now, it's really, there's a couple things that really precipitated the move as far as why it's coming here. Number one, our owner, we're one of the largest privately held mortgage bankers by one person, and CMG actually stands for Chris Michael George. He is the owner and founder. We have over $1 billion servicing portfolio, so we have a huge servicing portfolio, which in a time last year, if you weren't aware, and even still now, there's a lot of mortgage companies are in trouble. They are not profitable. They're hanging on to whatever they can. Being with a company that has such a stable base of a huge revenue generator of over $1 billion in servicing, that's stability. So number one, I was looking for, hey, where's a company where I'm not going to have any issue like that? Number two, great leadership, huge product base, and the marketing. Just talking from my perspective as a mortgage lender, a lot of times we're in the marketing space, right? It's sometimes it's not even always the best loan officer out there; it's the best marketer. So any resources that could help me get my brand out there and help me market, that's a big benefit. And CMG offers me that too. So that's just kind of like, the long and short of it there.
Cool. I mean, here's why I see the benefit too of working with, if you're a first-time home buyer, you're a real estate investor and you've changed realtors, and every realtor is going to kind of have their person that they might work with. And I've went through several realtors, and because of doing that, I've worked with different lenders, right? So you get to see what's good and what's bad. But if you have a lender that you can say, maybe you're buying in a different area, you need a different realtor. Maybe you're, buying direct, right? And you don't even have a realtor. To have a specific lender to go to, it sets you up for an advantage, because everyone has a different process. And you might be, I don't need to name specific names of other companies, but I've worked with people who have been at a company for 30 days, right? And they're just handling the new clients that come in, or somebody who doesn't have a lot of experience with investment loans, and they don't know what levers to pull. And it's a real thing. I mean, I've done this enough to know that, like, if you go to different banks, they have different products. And if you talk to different people at different banks, they have different knowledge of the specific products, right? So you might not get what you're asking for. And you've had to go to 6, 7, 8 different lenders or banks to try to get something that, like, the seventh person, maybe it's you, Travis, that they talk to. And they're like, well, I'm surprised I didn't know that. Like, of course you can do that, right? And so this kind of cuts through the fat a little bit to have someone that we can turn to. And also, we haven't used you for every deal, like, right? So our relationship has blossomed in the last year or so, but now that we know you, we can call you for advice on things. And obviously your time is valuable, but that built relationship is it just goes above and beyond the actual product of the loan. And that's what I wanted to mention there.
Yeah. I want to piggyback on that too. And I don't know if people listening, you think about this. Like, I tend to look at my life and think about, like, hey, do I have a guy for that? And I know it sounds pretty basic, but it goes from a barber to someone to help fix your car to a lawyer to, like, there's just basic things in life. And as you get older, you need some of these things. And
chiropractor.
Chiropractor, doctor. But it goes on, for example, like a doctor. If you have a relationship with someone, you're going to cut the line, or you're going to be like, hey, listen, I had someone drop off today. You can come in. That can be for a car appointment. That can be for a doctor. That can be for a haircut. That can be anything. So we talk to a lot of people. And when you're first starting out in the real estate investing world, this is what we learned to be true. Your relationships and the team you build are going to help elevate you and scale you the quickest. Now, for us, luckily, we had it was actually our introduction to you is our title agent, or I guess he's a VP of a title company. I'm not going to drop his name here, but eventually I'm sure he'll be on the show. I've had a 10 plus year relationship with him, and he's family to me. And he's like, hey, you need to meet my boy Travis if you guys are getting into real estate. I was like, okay, let's talk to Travis. Within the first 5 minutes, actually, it's funny. Corey and I met Travis together on the same day. He was hosting a meeting at a restaurant, and it was really upscale for 50 people. We got these VIP passes. And when we first met him, we were like, well, this doesn't feel as stuffy as I thought it was going to be. This is awesome. And we kind of hit it off instantly. That's just a side story. But what I say to that is, I truly feel the relationship, and I like knowing someone's going to go to bat for me or pick up the phone if I have a question and not have some underlying motive of how's this going to help me? You shoot me straight. Like, yo, right, this is not the package for you. Honestly, we don't have the right rates. Go look at someone else. And you actually pass the baton to the person that has it, which I really like. So I say all that to say, when you're building your team, you want those people that you have in your phone that you call and you go right to. Travis is our guy for lending. We're going to start there. And then, we pivot from if the product doesn't fit. And I say that for the title agent too. We go hand in hand with Travis. So it's once we have the lending signed up, cool. He just works with the title agent to facilitate and close the deal. So it just feels great having people that have your back in the space. And for us, we don't have to scour the internet and go look and who's the best, look at the ratings. We've gone through the trenches, if you will, or the war zones to say, okay, I know it doesn't work. Because as Corey's mentioned, we've worked with a bunch of different realtors, and they have their people that they work with. And some of them are good, some of them are bad. And truly, I've had some not so great experiences with the lending process. It's always difficult to get things to the finish line at some points. But when I'm sending in the same paperwork over and over again, and they act like, oh, I didn't see this. I'm like, dude, you're clearly not doing something right. So you guys have a great portal. You remind me if we need something. So I'm not trying to blow smoke up here. I'm just saying it's been a pleasure so far, Travis. And even if we do, like I mentioned, people we don't utilize every single product that you have. It's really nice to be able to have that contact in our phone that we're like, dude, let's just run this by Travis, see if this works. And he'll pass the baton, if you will, or intro us to someone else. That just spreads the web of relationships once again, because you're going to meet someone else that's going to help you maybe 5 steps down the line. So I'll get off my soapbox there, but that's what I wanted to say.
No, I think you hit on something that's super important. And I think it's worth bringing up, where it's the element of your people. right? And I actually I talk a lot about this with all my clients when we're sitting down, we're talking, because we have a lot of, I always equate this to this. You're not just buying a piece of real estate, you're starting your wealth journey, right? Because the biggest separator of net worth in this country is people who own real estate and people who don't. And there's a stat on it. I just saw it again recently. It's a huge difference, right? So we want to be proponents and advocates of people owning real estate. But in addition to that, in talking just maybe a more of a microcosm, Rye, of what you were just kind of talking about there, everybody, have a person. We should all have, and I call it your personal board of directors, right? Who are your people? Who's your attorney? Who's your go-to attorney? Who's your go-to planner? Who's your go-to insurance agent? There's a comfort level of, and just a calm when you know you're working with the same people who know your needs, who you trust to get the job done. And even more so from a synergy perspective, a lot of times maybe my CPA and my financial planner both have to talk. They have two different perspectives on our situation, both very valid and important. Having those people around you that are there to say, hey, it's, who am I? I'm Travis David LLC, right? I'm the company. These are my board of directors. These are my people. I would urge and encourage people, again, if you're listening to, who are your people? Who do you have around? And if you don't have a personal board of directors, start building it. Get to know people, network out there. Ask us, ask Rye, ask Corey for introductions to really build that out, because it's amazing what happens when the people that when they have great working relationships, things go much smoother. They know how each other works. You're much less likely to run into an issue when you have the people all working together. There's an energy to how people work too, right? It's like a cadence to that once everybody's familiar, it just creates a better experience, man. And it's just, I think you hit on something really important there. So that's good.
Yeah. And at the end of the day, we got into this business, the real estate and the podcasting business, it's to make money, but it really is to help people. If you have, when people shoot us DMs, and there's probably some that we've missed, right? I hope that we get to all of them, right? But if we can help, we will. And if somebody's in the Philadelphia, Jersey, New York, our area, and they need something from us, and we're not expecting anything in return, we put out an educational platform to try to help people. It just so happens that it ends up coming back in return. It always does, right? So it's just how it works. So if you are looking for a lender, or you're looking for a realtor and we can help, that's what we want to do. And that's why we're having Travis on, because we want to give people that are listening to our show the best possible experience, or the leg up, even if it's 1%. If we can give you 1% of a leg up over just trying to go search on Google to try to see someone who's 5 stars. We've all been there to try to call someone new, and they're they don't know if you're going to close the deal. There's all this missing information about the relationship. So that is why I feel like it's important to bring on people like you to share, you invested in us in some of our deals. And then about a month ago, I called you on a random day because my sister had an issue with a loan officer. And I was like, we got to call Travis. I can't believe I didn't tell her this in the beginning. I didn't even know you were looking for a home. Here's Travis. That deal ended up falling through on the realtor side. But it's that just knowing that you have someone in your corner, I really feel like is super important.
Yeah, it's the education piece too, and I'm sure you guys, just as you're, with the podcast and just being successful as far as what you do, you get people who maybe call you for different pieces of advice or educational kind of stuff. We get that on our side too. And really, I love educating clients, and I love kind of because there is such a huge gap as far as what people think to be true and what reality is. Thank the internet for half of that, right? Half of what they see is true. And once people start going down rabbit holes and they're buying a house, half of my job sometimes is kind of dispelling certain things that people think, right? So it's kind of hey, let's start out nice and clean here. Let me set you straight and clarify some things and educate you. Let's get educated on the loan process. Let's get educated on the benefits and what actually owning a home looks like, the benefits of owning investment real estate and cash flow and all that good stuff. So yeah, education's huge.
That's really important, Travis, too. It's funny. I'm trying to think back to like even when I brought my first primary residence, and these were all through referrals. Like, hey, building your team as you say, right? And you go through people that you think they're going to be great, and then they sometimes aren't, and you end up where you end up. But for going through the initial process, no one really educated me. I was like, I was about to get married, and I was like, I need to buy a house, right? Like, this is just like the next thing, and this is pre real estate investing, and I was like, I luckily fell into a great deal. And I can say that's buy early, right, and hold all that. But we went through the process, and the lender, I get to the lender, and I know nothing, dude, absolutely nothing. I was not educated on anything. I'm like, okay, well, I think I can afford X amount, and like this is how much I make, and you give all this information. Right. I think a lot of times a lender, or this is a fear that I've had after going through it. They'll tell you can afford X amount, and some lenders will push you. Hey, you can afford a $750,000 home, but should you buy it? It's right. Like, if you look at your financial picture, the answer is no. Based on where I was at, I was told I could buy a $750,000 home. My house I ended up buying was $365,000. It was half that, or something like that. But the point is, I'm like, dude, I would have been strapped for years on those payments
because the lender wants to make more money off of you
and just keep rolling, right? If they get paid off the percentage, I don't know, but I'm not going to drop names, but. I wanted to bring that up, and if you guys have experienced that within the industry, because I assume that's a thing.
It's a big thing, and that's where it goes to, again, educating the client as far as and the way that I explain it is kind of like two boxes. The one box is going to be what you're approved for and what your max budget is from a lending perspective. That does not mean you go out and absolutely spend that amount of money, because in box 2 is where we talk reality. We talk what your actual budget is. We talk what makes the most sense, because the two biggest things, when you're buying any sort of real estate anyway, but specifically with buyers, is how much is it up front and how much is it per month, right? And yeah, we have credit reports, but I'm not going to see if you have a $1,500 childcare bill. I'm not going to see if you have, if you owe people money on the side. That we're dealing with a very, not very limited, but it's an incomplete scenario as far as what your true lifestyle budget is. So that's where it's important to make that distinction. And you probably, it's funny to hear you kind of say that too. It's like, there's your mortgage approvability, and then there's what makes sense to where you can, what makes sense to you financially. And how do we define that is by two things. Number one, we always want you to run your household cash flow positive. Right? So whatever your payment is or your proposed utilities things, we want to make sure that you still have more money coming in than going out. And number two, we still want you to be able to save money on a monthly basis. You don't want to be house poor. So if you can do those things and still have your max budget, awesome, more power to you. But most of the time, if we're able to approve at a higher number and they're just not comfortable going there, it means something else is at play, and we have to talk reality. So yeah, that's funny you brought that up too.
Yeah, well, I brought it up for a reason. I think there's a lot of people out there that will rush you into something, and that's not the case for us. And that's why, because I almost got put into a very bad position, that's why I want people to be able to have a great first experience and start at least building a relationship with a good guy that knows his stuff. So what we're doing here now is we're going to be offering an opportunity for people to work with you. And really, we want it streamlined so that way we can see the people that come in and out. So if you have questions about Travis, you can come to us. But what we've done is we set up a web page on our website. So what you're going to do is go to juice-enterprises.com/need-funding. And you'll see a page there with a video from Travis, and there's a button that says schedule a consultation. And for that is the most important thing, because what it's going to do is allow you to book a call with Travis to actually walk through the process of, hey, where are you at now in your journey? Where do you want to be at in the future? And go through the consultation to find the right fit for you in the future. Maybe now is not the right time to buy. Right. And for us, I felt pushed into something, and I never want someone else to feel like they have to. So the point is to set up the consultation to get your, house in order before you go buy the house, and say, hey, where am I at? And what are the steps I need to take to get there? And I have full faith that if they work with you, Travis, they'll at least have a plan set in place, and whether they take action on it, up to you guys. But we want to at least provide the opportunity to our listeners, because it can be a very daunting thing to go out and find a lender or build your team and find the right people. And we found our right guy. So we just want to provide that for everybody else.
No, thanks, man. I appreciate that too. And lucky to know you guys. But I think what we have set up here is really going to be valuable. And that's why anybody, the audience, I encourage you to reach out to me, even if you're not thinking, even if you're in the very early stages, maybe you're not looking to buy until next year or the year after, or you're not even sure what to do, because that's going to be a call where we're going to talk, number one, as far as goals, like what are you thinking? What are you even entertaining? Where are you at? Where you want to be? And again, how do we provide the best roadmap to help get you there? And the biggest miss that I see with people when there are problems, whether it's with transactions or people just not getting what they need or expectation out of real estate, is they don't take the time to plan, right? And that's where the very first step is inquiring with somebody like myself, where we can help you get clarity and some confidence behind what you're about to do, right? Because otherwise you're just kind of like, you're going to, what happens, a lot of people end up talking to multiple people. They get 5 different perspectives, and confused people don't do anything. So there's a paralysis that happens there, and then they don't buy don't hold yourself up, get good quality guidance. And again, whether maybe it's not right now, but at least you'll know what you need to do to get where you want to be. And that's as much and as valuable as anything for those people, who are just looking for, hey, just point me in the right direction.
100%. And I forgot to mention, so with the webpage that we built out for you guys, it's going to have some information on the current products that are available too. So you can do a little homework before you book the call. We highlighted, exactly what's going on right now in current 2024, what CMG has to offer. Travis has a welcome video, and then you can book a call with him and navigate all the information. And then if you have questions beyond that, hit Corey and I up too. We've been through this. Like we said, we've used Travis and the team multiple times. We back them 100%. And I think it might be worthwhile. No harm, no foul either way. I just want to say that, we're just trying to provide a service. If somebody is interested and they're looking to build that team, we have Travis on our team, and feel free to use them.
Yeah. So Travis, this has been a pleasure. We talked to you a lot, but we have never done it on a live podcast before. So we appreciate your time, cool, man.
Thank you guys.
If I guess we already gave him if people want to reach out to Travis, the best way to do it would be go through our website, book a call. But thanks again, man, for coming on. This has been awesome to, like I said, we know you, but to peel back the layers on the business is pretty awesome. No,
definitely. I think this was great, and I appreciate it. And it may be something where even down the road, if there's a more specialized topic that if you're hearing certain, some feedback on, or people are asking a lot about something, I'm happy to come on and just do an educational session on something that you feel is valuable. So, but this was cool. I appreciate you guys so much.
Oh, absolutely. Thanks so much, Travis. It's been a pleasure.
Thanks for tuning in this week to the Weekly Juice Podcast. If you liked what you heard, please leave us a 5-star review on Apple Podcasts, subscribe, and share with friends. The more ratings we get, the more ears we'll get on our show, and in turn, we'll be able to provide you with more high-quality guests. You can also find us on Instagram at Weekly Juice Pod, where we post daily tips and tricks and document our own journey towards financial freedom. Make sure to tune in every Wednesday to get your weekly juice.